Hey, what's up traders? Welcome to another video. In this video we will look to the market phases and understanding them for being better and more efficient in the trading. So as you probably know, there is a 4 market phases, right? So it always starts with the accumulation, or in other words, consolidation. Then after the consolidation we have always expansion. Then we could have a retracement and another expansion or redistribution. This is how the market is always moving, right? Then we can have a reversal and the market moves again in the same phases, right? So we have a reversal, expansion, consolidation, expansion, consolidation, right? And potentially again the reversal. It is quite easy, it looks very simple, but if it is really that easy, everyone would be trader and millionaire. So there has to be some hack why not everyone is not making the money, because it looks very simple, right? So in this video I'm going to show you the price action laws and relations between these 4 market phases and the key levels, which will help you to filter out the best trading conditions and the situation where you want to be in the markets or stay away. So as said, price is always in the consolidation before we get expansion. After the expansion we can get retracement. And after the retracement, there is always again expansion. Later in this video, I will show you how you know that this is just a retracement and not a reversal yet. And again, after the expansion, we can go to the consolidation. Now, when we are again in the consolidation here, can we get a reversal? Yes, we can, but there is always that trick which I have told you about. And it's here on the top, where the market makers always using the range to suck the traders to the both sides, and before they start the real move they mostly manipulate the price to the wrong side to suck the people to the longs before they short it. So it's clear manipulation. This manipulation is mostly the final touch to the key level above the range. So the price is mostly ranging just below the key level, and then it manipulates to the key level before the price starts to drop down. To know if we're gonna get a manipulation or not, we always need to define our key levels. Whatever type of key levels you are using, it's up to you, but then you need to watch the profiles. So we got our key level, and then you are profiling the market phases. So for example, you have expansion, consolidation, expansion, consolidation, and then price is consolidating below the key level. And it's starting to become very obvious that the reversal is coming, but the price still didn't touch a key level, right? And you will see the price start to dropping. This is where the most traders start to FOMO and they start to shorting, which they are actually right. But what the market makers are actually doing by reversing the markets before it touched the key levels, just think about it. People start shorting in here, right, expecting the price going lower, and they are right. But where they put their stop losses above this range, right, around this key level. So when the market makers are dropping the price down, they are actually creating, engineering the liquidity into the markets, which they will come for before they start proper sell-off. So this is how the people get trapped and stopped out, even they being the right before the real moves happens without them. So knowing the relations between the key levels and the profiles is very important, because also when you learn this, you cannot use it as a pattern. You don't want to be a pattern trader. You want to put sound logic behind your decisions. So in this case, we've been expecting the manipulation before the price started going down, because we've been getting the accumulation below a key level. But what if market is expanding and it comes into the key level and start to ranging in there or distributing? Then it doesn't need to do this manipulation before price start to drop lower, because we are already on the key level where the distribution is coming, right? So to summarize that, you expecting the manipulation only if you're getting a consolidation profile below a key level. And when you're getting a consolidation profile on the key level, it doesn't need to do a manipulation. Now this looks very easy, but it will definitely not look always like this. It can be also played slightly differently. And we will look at this in the bullish example. So we got our key level again. And now we are getting a consolidation, but quite far from the key level. In this case, it can happen that way that price will do a expansion touch to the key level and it will do immediate reversal. So again, what to know from this, that if you're getting a consolidation and you are not on the key level, you should not be taking a long trade in here, because it's again mostly the manipulation before the price drops lower, right? Again, shorting, retail traders, less informed traders entering the shorts and they shorting to the key level where the market makers will reverse the market. Now we have learned about these four market phases: range, manipulation, expansion, and retracement. There is a specific relation between each others, and by identifying the current market stage, we can predict what could be the next one. So again, we start with a key level. The minute ago, I've been talking about two potential scenarios, so both of them start with the range. Range just below a key level. The second one is a range a little bit far from the key level. So let's look how it can play out. When we have the range below it, then we get a manipulation, right? Reversal. Then when the price closes below the open of this candle, below this one, so we go up, then down. So this is basically the wick of the candle. This is when the manipulation stage ends. After the manipulation, always, I repeat, always comes expansion. Price is expanding. After the expansion, we can get only two potential phases, which is a retracement or consolidation. So price can retrace. What does it mean, retracement? That we're gonna get continuation, or we're gonna get consolidation, and after the consolidation we're gonna get again expansion. Why the price will not be reversing from here? It will tell us only if we are on the key level, right? So if key level is far somewhere here, then this is not a reversal yet. I will tell you a little bit more in the second. Now let's look to the second example. So we have a consolidation, expansion, straight to the reversal. Reversal consists expansion, and after the expansion we can have a consolidation, but after the consolidation in here we cannot get expansion up. We have only continuation. I hope it's not too overwhelming and complicated for you, and now we will put it together with the key levels, which will start to make more sense. So you need to try to visualize that by yourself and you will understand this. So again, we got our favorite key level. And now, by identifying the current market stage and putting it together with the relation of the key level, we will filter out 7 possible outcomes. So again, everything starts with the range. After the range, if we get expansion, but we are not on the key level yet, what's gonna be the possible next market phase? Consolidation or retracement. Not reversal yet, because we are not on the key level. But if we got expansion starting from the consolidation again, so we got the consolidation, expansion to the key level, and mostly comes reversal. If you have range but not on the key level, then you expect manipulation. So you have range not on the key level, you can expect manipulation. But if you have a range on the key level, you can expect expansion. Then if the market is moving, expansion, then you're getting a reversal but not on the key level, then it's not a reversal but just a retracement, which will follow by another expansion to the level, right? And then if you have retracement to the key level, you can get expansion. So it's the case of the breakout. So you have the consolidation, expansion, and you have a retracement to the key level, and then you can expect another expansion, right? And then the most key thing from knowing all these profiles is that after the manipulation, you have the range manipulation, then always comes expansion, right? There is never manipulation and retracement, or never manipulation and then again range. Right? There is always following the manipulation. So defining a key levels and the behavior of the price on the key levels with putting together the profiles or the market stages or phases, whatever we call it, can help us to focus only to the market phase we want to trade, which is a expansion. After the retracement, when we are not on the level, are you expecting expansion to the level, retracement to the level, expansion, and then after the manipulation, which I have said right now. So by filtering these things and avoiding to trade retracement when the price is not on the level, trading in the range, especially if the price is below the key level. So when you expect the manipulation, you don't want to trade this because you don't know how big the manipulation is going to be. So here is the summary and the filter of the possible outcomes in the relations with the key levels and the market phases. If you get an expansion but not on the key level, the possible outcome is going to be retracement or the range. You don't want to trade this. If you get expansion plus key level, then the outcome is a reversal. This is where you want to be positioned. If you get a range but no key level, then expect a manipulation to the key level. You don't trade, you wait for the manipulation. If you got a range plus key level, you expect expansion. You want to trade it. A reversal plus no key level, what does it mean? It means that it's just a retracement and another expansion will follow. So it's a retracement, you don't trade it. If you have a retracement but plus key level, then it's expansion coming, you trade it. And then the manipulation is followed by the expansion, you want to trade it, right? So the same case, if you have a range but no on key level, you're expecting the manipulation, and after the manipulation, you get expansion. Right? So that's where you mostly want to be in the markets. Okay guys, I hope that this price action loss makes sense to you and it will help you to filter out the most probable situations on the market where you want to be positioned yourself. If you have any questions, let me know in the comments. Hit the like and subscribe for the more crypto trading content, and I see you on the next video. Bye bye.